As Bitcoin continues to evolve into a globally recognized store of value, so too does the appetite for Bitcoin as a strategic asset. However, when considering the investment potential of Bitcoin, custody remains one of the biggest challenges facing investors. The Monochrome Bitcoin Fund, MBF, addresses this challenge by providing investment-grade Bitcoin exposure to wholesale investors with regulated insured custody via a familiar investment vehicle, a unit trust. Similar to a real estate or gold fund, a Bitcoin fund presents a simplified solution for wholesale investors seeking digital asset exposure. MBF is governed by an experienced investment committee, providing an additional layer of security and trust for investors. So how does it work? MBF targets a near 100% allocation of Bitcoin. The Bitcoin is secured with licensed and insured custodians, removing the need to manage your crypto assets directly. Investors will be able to track performance through fund reports, which include unit prices reflective of the performance of Bitcoin's price action. For risk management purposes, the MBF employs a passive buy and hold strategy with no active trading. Investors can rest assured that Monochrome is backed by more than 150 years of leading industry knowledge and leading global product partners. Start the application process today and experience MBF as an investment solution for your portfolio.
So thank you everyone for the few minutes. Just to give you, this is just a sample or a soundbite of a very broad topic, and we only have a few minutes. So I'm going to just give you some very high-level key things. I'm supported here by two of my team at our stand today. So all I could suggest is in the next 10 minutes, you'll get a few sound bites, and then by all means, we can unpack some of that for you more personally over lunch. So we have a disclaimer, of course, as you've seen from others today. We operate under an AFSL. That's important, and I'll explain why. So why does Monochrome exist? My background's actually intrinsic value investing. I was managing director of Tyndall at one stage. So I've been on a personal journey as well, what do we do with this new nascent asset class? The thing that really intrigued me is there's so much noise about it, as you've heard from Darren, and there's so much risk around it. So my sort of position was, how do we create an environment where we get the right people and the right structures and the right knowledge available for people? So the percentage of advisors that have had inquiries, we did a survey, is 77% of advisors have had inquiries in the last 12 months from their customer base, and only 11% of them felt equipped to be able to respond, whether that be regulations, product, education, understanding, ratings, access via platforms. All of those issues needed to be resolved. So we sort of embarked on trying to close that gap out, and I'll share some of what we've done. So there's a couple of things that are important around this asset class. Is who here has Googled digital currency? I think we all have at some point, either because our clients have forced us to or we've been intrigued by it. And what have you noticed? There's a lot of nonsense out there, isn't it? It's an unregulated asset. So influencers, channels that lead you off into scams, or it's a very unregulated Wild West environment. So the first issue was education, and I'll share what we've done there. And the other thing is custody. So who here has had any clients that have money on a digital exchange? What happens when the exchange collapses? They have zero. So who here is a trustee of a self-managed super fund or an auditor? Right. Have any of your clients come in with exchange exposure of digital assets? Have you signed them off? Here's the thing. The exchange, you don't actually own the assets, the exchange does. So as an auditor, you should be concerned about title, who actually owns the underlying asset. So part of our solution is what we're sharing today, but it's just a heads up for you that that's actually a weakness. Some people are promoting exchanges, as you've seen, to the self-managed super fund market, but you don't have actual entitlement to Bitcoin, for example. It's a promise. And some of the exchanges were obviously quite concerned about leverage. You know, they're issuing that you've bought digital currencies, but you don't actually know what's happening behind the screen. Now, the business came into existence with a group of people that have digital asset experience and traditional funds management experience. So our philosophy is simply this: custody is the biggest risk, so we've solved for that. How we do that is we have managed investment scheme. We're going to be issuing an ETF and a retail PDS. Until October last year, you couldn't have retail products. They weren't available, so wholesale was the only pathway. A lot of people talk about making money out of digital currencies. Alpha's not yet proven, broadly speaking. It's like a new asset class, and it's unregulated as well. So people use coins as a way of raising capital. It's capital formation. It's instead of listing a company through an exchange, you issue a coin, and it's a project that you're investing in, and you get issued coins. Now, the difference between a good project and a bad one is very hard to discover. And what also happens in reality is dodgy coins go up rapidly and a good project goes sideways. So you're not even being rewarded for investing in the right projects. So there's a lot of work that still needs to occur in digital assets. We say there's all of those things operate excluding Bitcoin because Bitcoin's actually different. Bitcoin's digital money. It's a protocol. Coins are released every 10 minutes into the network. There's going to be a total of 21 million coins in that protocol, maximum. Some of them have been lost, but that's different to all the other coins. They are actually different things. I'm happy to share that at the station later. Bitcoin's not intrinsically valued. All of us, myself included, are great believers in valuing something based on cash flows. So the things that are in plain sight for us that are not intrinsically valued are things like land. It doesn't produce anything. It's what you do with it that produces something. So land itself is a speculative asset. You know, the block on that side of me sold for that. The one on that side sold for that. So mine must be somewhere in there in terms of pricing. So land's in clear view of us, and we kind of accept that as being an acceptable investment. Gold is the other one that's quite well known as being a non-intrinsic valued investment as well. So importantly, we think education is really key. Because without that, you're not informed. I'm a great believer in if you don't understand something, you shouldn't invest in it. But importantly, as an advisor, you should know because you have an obligation to know. Whether you invest in it or not, that's after you've done the work, not before. I won't go into the history of Bitcoin other than to say that 10 years ago, 12 years ago, 10,000 Bitcoins bought 2 pizzas. Because there was no network, it was, cypherpunks having fun with it, and they tried to transact. The idea of Bitcoin is, when you go to a flea market or the fruit market, you can walk up with cash and you and I can transact. There's no bank, there's no intermediary, it's just you to me, peer-to-peer. It's a digital experience that's designed to be the same thing, so you're not using any of the banking ecosystem in that transaction. Now, what's occurred in that 12 years is it's really taken off, obviously, and the network effect, netcast law has really played its part, and there's now over 100 million people involved in Bitcoin. 24% of Americans have exposure to Bitcoin, either directly or indirectly now. And now, in 2022, 2 Bitcoin buys 10,000 pizzas. And that just gives you a sense of what's occurred. With the time that we have, I'll just move quickly to some of the things around investment characteristics. So because it's not intrinsically valued, what is it? Well, because it's not linked to the monetary system the way that other fiat currencies are. A fiat currency is affected by interest rates, how much money is printed, sovereign indebtedness, the stability, the network effect of that currency itself. They're all fiat characteristics, and Bitcoin itself is not attached to that system. So it's not intrinsically valued, it's not interest rate sensitive. It could potentially be an inflation hedge, yet to be proven, like gold is seen as. It's not sovereign, so it doesn't carry sovereign risk, and it's geopolitically agnostic. So it doesn't care about government policy. It's by the people, for the people, very decentralised, the most decentralised monetary system we've ever seen in the history of humanity. And the scarcity is we know the supply. At the end of this process, there'll be 21 million coins. We're at about the 19 million mark now. So you can model with a high degree of certainty what's going to occur in terms of the manufacturing of Bitcoin. Obviously, it's the demand function is the part that really determines price, and that is sentiment. What I'll do is just go to the advice, specifically what's occurred, so that if the first thing is By it being regulated, it's actually changed up your obligations. When it was unregulated, you could ignore it completely. Now there are PDSs that are coming out and ETFs. So they're in your purview. Ratings are going to occur in this asset class and products are going to be available. So that's a prerequisite for me able to really advise in it anyway, but it's here. 29th of October is when, last year is when they gave the guidance on how that can occur, and a number of manufacturers, product and fund managers are developing them now. Research ratings are commencing. We're the second fund in Australia to be rated. Obviously, you'll need APLs, model portfolio weights need to be agreed. PI cover, endorsements on those policies need to be checked. So a lot of the insurers put an exclusion on crypto about 2 years ago before it became regulated and safe ramps in and out of the asset were available. So they need to be discussed with your broker. You need accreditation. So we've developed 10 pieces of content. It's all been CPD accredited. My background, it's not Bitcoin maximalist, it's centralist. It's what's practical information that the advice community needs to be able to operate in this space. It's not for everyone. You need asbestos gloves when you pick it up. But we provide you with the information that you need to know how it behaves, what it is, what it isn't. So you can also guide your customers away from, your clients away from the current experience that they're having with it. In the United States, it's common practice to say to someone how much you're willing to lose. It's a challenging question to the customer to limit their exposure. Typically 1 to 5% is what we're saying. The other thing licensees can do is pre-vet statements of advice. So I know a lot of you operate in the post-implementation audit process, but with specialist products, getting the pre-work done first is a nice safety net. Now that information that we've put on the internet through our research tab where you can do it and get the CPD, we even do ethics, for example, and regulations. They're two topics that are hard to find content on. Some advisors are actually getting their clients to do it, to do the content, so that it really challenges the client. If you want to invest in this, you need to do the work too. And that creates a much more balanced conversation when they get to decisions. I mentioned the research comment. Couple of common questions just to finish. You see headlines that Bitcoin's bad for the environment. Who's seen that? Right. So that's a nice headline. And the reality is what's not understood is Bitcoin actually harvests wasted energy. So the only time it makes sense to produce Bitcoin in mining, participate, is when you get energy extremely cheaply. So somewhere in the world it's cold, where somewhere else it's hot, it's daylight where it's dark. So the network's global, and all energy producers need off-take. You know, they either need someone to take base load or off-peak load. And Bitcoin miners participate when they can get energy very cheaply. That's on the existing network. The other thing that's occurring is ESG type renewable energy projects, windmills, for example, wind farms. They need to model what do they do with energy when the grid doesn't want it. And that happens. So if you're going out past Yass, you'll see on a windy day, sometimes the fan's turned into the wind. They're not doing anything. So that asset's idle, it's non-productive. So Bitcoin miners are there to help make renewable energy projects viable. And that's becoming a common theme we're seeing in capital raisings. And the third is, in relation to ESG, is just in Texas is a great example where methane flutes, methane's 56 times more harmful in the environment than CO2. They're just putting Bitcoin mining devices capturing that energy at the point of release and converting it into Bitcoin. The next question that comes up is the central bank digital currencies coming out. Now, the way I see it is you had paper money, polymer money, digital money. It all comes from the same place. It's all fiat released. So it doesn't actually achieve anything in terms of changing up the system in the way that Bitcoin's not attached to that. So countries that want independence but don't have their own currency, El Salvador, we're seeing it starting to occur in Africa, will have an alternative to being US dollar backed. And that's what's starting to occur. So we don't see that as a threat because it actually operates differently when you understand the underlying way that it's produced and it's priced. And the third part is just drivers' demand. I shared with you the environment which it might become interesting. We're seeing geopolitical risk accelerate, inflation up, interest rates up. That's an environment that hasn't existed for the last 13 years of Bitcoin. So it'll be interesting to see how it behaves. Now, in the recent market correction that's occurred, I like to say, we've all been here before, all of us, with these major events. When these events occur, the correlations of all assets is one. Like every asset class corrects at the same time, not differently, and by degrees, but the direction's the same. We've seen it before, this is what's occurring now. We think once we get through that, people will start to look at the underlying case for these assets, and it will start to diverge again. Now, that was my 10 minutes, so happy to take a question from the floor. NFTs, yeah. No, I don't know about that. I think we're saying non-fungible token, actually, not something else. Well, it's speculative. You know, it's like artwork, and that example of the NFT that you just raised, whatever that was, I wasn't familiar with it, but it's just an expression of art. And you know, obviously, art sits on walls and people value it. But why is that worth $50 million? Well, someone's willing to pay for it. So you know, restored sports cars. You know, we see them going for ridiculous prices. Pieces of art. It's just that. So what is important is how those NFTs are released, and DeFi, smart contracts, they're using the Ethereum protocol. So that has a purpose. It's actually, you're using the blockchain for a purpose, and they're embedding these businesses and using the tools that are available in the Ethereum protocol to actually deliver those NFTs or smart contracts, DeFi. So that'll be interesting to watch over the next few years what occurs. Thanks for the question. We'll be here at the break. Thanks, Darren.
Thanks, Craig. And as Craig mentioned, and I should have said this to you about Lauren as well, they're both at their stands. So if you've got any questions stemming from their presentations, please go and visit their stands at the subsequent breaks that we'll be having.
Hi, you know Accurium as an award-winning actuarial certificate provider. But did you know that we're also an award-winning SMSF education provider and an accredited educator with the SMSF Association? To help you expand your SMSF knowledge, our SMSF education platform, TechHub, provides you with access to hours of valuable CPD in the form of accredited webinars, technical articles, and calculators. TechHub is available free to Accurium's actuarial certificate clients. We've also recently introduced our CPD Plus offering, which is available to anyone to attend, with TechHub members being entitled to special discounts. CPD Plus is where you'll find our 90-minute web classes, as well as other special education events. To find out more about our award-winning SMSF education, please contact us during the conference. We'd love to share with you our passion for SMSF education and the benefits of TechHub and CPD Plus.